Up next, Yahoo came out with results that trailed analyst estimates. We're going to get some insight in their earnings. Their Chief Financial Officer, Susan Decker, is joining us next. We want to focus for the next few moments on Yahoo. The shares, as you see, are down over 10% right now. And here to give us a little more insight into the company's earnings and the forecast is their Chief Financial Officer, Susan Decker, coming to us from Sunnyvale, California this morning. Good morning, Susan. Thanks for being with us.
Good morning. Thank you for having me.
The street obviously was disappointed in some of the numbers and more specifically in the outlook. Could you shed any more light on it to possibly stop this decline of over 10% right now in your shares?
Well, I don't know if I can do that, but I can definitely provide a little bit more clarity on the outlook. We put out a revenue forecast of close to 30% in growth for 06. We put out margins that we thought could hold with our 42% levels in 05, which was our highest level in our history. And we put out very strong free cash flow guidance. The issue, as you point out, is expectations. We just didn't feel it was prudent to plan for increasing margins in 06. And many of the street analysts were looking for increasing margins. So I think that's what you're seeing today. Our plan is to deliver on a lot of the things that we've said we're going to deliver on. We have a very ambitious agenda in terms of priorities over the next year. And one of the most important, and one that's getting a lot of focus, is that we need to improve our capabilities in monetizing our search traffic. We have a huge amount of traffic. We're the number 2 player, and there's hardly anybody behind those top 2 players. And so we have a huge opportunity if we can monetize it better, but it's something that we need to roll out a new platform to do. And the benefit of that is not really going to come until late in the year and in 07. So I think you're seeing a little bit of adjustment in expectations on that front.
Right. I think there was some disappointment of the delayed launch, not till 06. That means the monetization doesn't start hitting until 07. What specific actions can you take? Are you trying to see if you could possibly move those dates up a little bit, or is that pretty much where it is right now and the market has to just readjust?
Yeah, I would just say that we haven't changed our plan. It's just that we haven't provided complete clarity on our plan to the street until the last couple of quarters. We had acknowledged this was an issue for us starting in the first quarter of last year. And we said it's mostly a terrific opportunity because it's all upside if we can do it right, but we're clearly not monetizing as efficiently as we could. We had 4 different initiatives underway that started to impact late in the 2005 year and will build throughout 06. But the 2 most important that people are focused on really aren't going to be rolled out until the second half of the year of 06. We mentioned that in October in our call. We described a little bit more about our phased and deliberate rollout. Throughout the year, we have hundreds of thousands of advertisers who depend on us, and we want to make sure we get it right. We're more focused on getting it right and making sure that we can get maximum opportunity than whether it's a few months earlier than we originally planned. So that's what you're hearing. And I would only say that we have a pretty strong track record of picking areas that are important to us and doing it very deliberately over time. You saw our same pattern when we rolled out algorithmic search. We bought a company, we developed for a year, and then we rolled it out over a phased plan over 6 months so as not to turn on the whole world at once. We think it's more important to manage that risk so that we do it right for the long term as opposed to trying to rush it a little bit early.
In terms of advertising, did you sell a greater percentage of your available advertising space in the fourth quarter compared to, let's say, same time last year?
You know, we have sold pretty consistent amounts of our inventory from quarter to quarter. We do have inventory still unsold, so certain areas of the network are tighter than others, and we tend to bundle some of those areas with some of our other inventory areas. You actually saw that our page views were up north of 20%. So our inventory is created by our users, and our user and usage metrics are growing strong. So the issue of not having enough inventory has not really been a problem for us.
How much still have you not sold? You said there's still some availability.
We've never really put out those exact figures, but we have, the issue is that our inventory is growing so rapidly. It's not growing quite as fast as our revenue because pricing is going up, but our inventory is expanding rapidly. That's actually one of the great attractions of this medium. When you look at other forms of media, the audiences are flat or declining. Here, you're seeing inventory growing and growing, and so there's lots of revenue opportunity over time.
Which source of revenue? Is it the ads that are linked more to search results or more of the geographical display ads that saw the greatest percentage increase for you from a year ago?
We were pretty strong across the board. You know, we tend to think of our business as being search and non-search. Both of them were very strong and pretty balanced, actually, in our total revenue growth. We were up 36% in marketing in the fourth quarter. That was a little slower than earlier in the year, but was planned in our business outlook. And the reason for that is we had already cycled through, anniversaried some of the rollouts in the international countries of search, which had gone from not being monetized to being monetized over the last year. So pretty strong growth, 36% overall, and it's really across the board. We're the leader in the brand part of the business and have very strong capabilities in many other parts as well.
We're hearing from analysts, from some media buyers, that actually advertising prices have increased in this quarter. Could you give us an indication of how much have you seen of that?
Well, again, we're taking the two parts of our business. If you looked at our non-search business, the brand piece, if you looked at revenue per page view, again, we don't break out the numbers specifically, but we saw a double-digit increase again in this quarter as we have in the last 4 or 5 quarters. On the search side, we also saw a revenue per search increase, in the high single digits, very consistent with what we've seen earlier in the year. So we're seeing solid pricing growth in both forms of our advertising. We think there's much more opportunity on the search side if we develop a more efficient platform and algorithm for driving relevance.
Speaking of the search side, of course, you're still behind Google in terms of internet searches, and some people are speculating that possibly Yahoo and Microsoft may never be able to catch up to Google in this arena. What do you think of that?
I think in terms of overall searches, it would be unreasonable to have an expectation of catch-up. Google's been in the business for many, many years. They have about twice our market share. We're at the 25 to 30% level on a global basis. We'd be very happy to maintain that share and on traffic and then monetize more efficiently, which would help our revenue share over time. It's a huge market. It's growing rapidly, and we're very pleased. We think there's going to be multiple players in the market, and we're very pleased with our position.
Do you see competition increasing? Is it heating up given the fact now that we've seen Google's investment in AOL and the new search initiatives that are coming from Microsoft?
Yes, competition's definitely heating up. Competition in our minds is a good for us and for the industry. We've had competition from the beginning. We have different competitors all over the world, and it makes us better because we are all producing better products and services for consumers. In particular, the place that economically competition has heated up has been on the price of traffic, primarily off our network. And this is something that we've been talking about since the day we acquired Overture. We said that we really didn't expect the affiliate network to be a big profit center for the company. It's important to the vibrancy of the market, and we have a number of fantastic affiliates around the world, but we don't really expect a lot of profit out of those, and because we share a lot of the revenue with our partners. So that's a part that remains competitive and that we tried to quantify for the street in terms of our business outlook, what the impact would be on our 06 results.
Microsoft is a partner for you. You already cooperate with them on instant messaging and on advertising. Are there any more talks with Microsoft to open up other areas and for cooperation in other areas?
You know, as you point out, Microsoft is both a competitor and a partner. We've had a great relationship with Microsoft over the years. Some areas like IM, we have a partnership. Other areas like search, we've had a partnership, but they've made the choice that they want to go out and compete directly. And so it would really depend on the products and services. We remain open to other ideas with them, and we continue to have an ongoing dialogue with the company.
All right, Susan, we thank you very much for your time today.
Thank you very much for having me.
Susan Decker, the Chief Financial Officer at Yahoo.